right now there's a lot of optimism for this year. We've had 3 straight years of near 20% advances. It's been great. What's interesting is that we've had really, really strong economic growth over the last 3 years because of all the monetary interventions that we had back in 2020 feeding through. And we had a big expansion in the deficit, which has been now reversing. So as all that money's been coming out, we have started to see the growth rate of the economy slowing down. We've seen the rate of inflation slow down. We were at 9% and now we're down to about 2.7%. So we've had this reversal, and now what everybody's expecting is this idea of economic reflation. And there's an interesting caveat to this reflation narrative, which is that we're now going to have a resurgence of economic growth, but with no inflation, and the Fed will keep cutting rates. Well, there's a bit of a problem with that. If you think about it, that doesn't quite make a lot of sense. Goldman Sachs just surveyed more than 400 institutional investors, and the message was clear. Everything is bullish everywhere all at once. And they're right. S&P is at all-time highs. Russell 2000 is all-time highs. Small caps hitting all-time highs. Mid caps at all-time highs. Gold, the all-time highs. Doesn't really matter what you own. It's all going up. And the idea behind this is, well, why is this happening? Well, growth is strong. Central banks are dovish, cutting rates. Equities keep winning. Rate cuts are coming, and recession fears have all but disappeared. In other words, it's as good as it can get. And that's kind of interesting because you've had, again, as I noted, 3 straight years of high double digit. You've had a big, strong turn in optimism. So the general consensus is now bullish. Everybody's long equities. Doesn't matter what equities you own, they're going up. In the retail side of the sector, we see a lot of speculative risk taking, options trading, those type of things, because there doesn't seem to be any risk. So you've got economic confidence, policy easing, risk on positioning, asset allocations, by the way, at all-time highs, households as well as institutions. And this premise is that we are now going to have economic reflation because of basically 3 things. The One Big Beautiful Bill Act is now started. So that's tax cuts, that's deregulation, that is easing of conditions on banks in particular. Those are all expected to be very bullish for the economy. Then the other 2 kind of legs of the stool is that, of course, the Federal Reserve is going to be continuing to ease monetary policy, cutting rates, potentially doing more of this QE, not QE thing that they're doing. And then, of course, on a global basis, global central banks have also been easing monetary policy. So that's out there. And then, of course, lastly, you have all this business investment coming in for AI data centers and build outs and all these type of things. These 3 legs of this idea of economic reflation.
Catch me daily on The Real Investment Show. The link is in the description.